Hello and welcome to the first autopsy. So the first thing I need to point out is this is the natural gas market. We are going to be looking at when it fell drastically to 3.7. What I want to do is before I go into the TA, I just want to explain a few things about this time and period. So anyone who was trading gas would have, they would have known that the market, was in this uptrend. It was going up. So, you can see quite clearly the market is moving up. So everyone was unbelievably focused on buying. It's not a bad thing because there were plenty of buying opportunities, but they were kind of missing the fact that the market was also coming down. And a lot of people were kind of missing this. They were getting too fixated. And I think what the problem was is a lot of people hit the time frames, like 15 minutes and stuff. And I'll be honest with you, unless you're a very good trader, you are going to lose a lot of money if that's the technique you're going to use. And obviously it's something that we don't encourage in our Zenez training. So for me, you need to be understanding what the market is doing over a longer period of time. Now, I just need to go back a little bit before I explain this call. So the first part of this call, so the point where I knew it was going to go down. I didn't know at this point it was going to go down to 3.7. I can tell you at what point I knew, and I'll show you how I knew. But at this point, when the market come down to here, which was about 5.1 something, I was in a lot of forums and I was talking to a lot of people through emails and other groups, and I was just giving my opinions on what I was seeing, and I was kind of saying that I was going to be looking at buying, and I was going to sell my longs, close my longs around 5.8. I think it was 5.82, if I think if I remember off the top of my head. And I was going to go short, and from that point on, I was going to be looking at finding more short options. So let me just fast forward. So we're looking at daily, okay? So you better see quite clearly the market went from 5.1-ish to 5.88, okay? So pretty close to the zone I was aiming for. And then it showed this very bearish movement. A lot of people were already asking me how I worked that move out, but we're not really focusing on that right now. But that was the trigger point to me. Once this happened, this, and if I remember rightly, we got to about here. This is where I'm telling everyone that I'm going to be, once 5.18 breaks, I will be looking for 3.7 and I will be shorting the spikes. That is the best way to trade going forward. That was what I communicated. It was a lot more detailed than that, but I was just trying to give people the best advice I could, because a lot of people, they don't understand the markets, they throw themselves in there, and I just didn't want to risk people blowing loads of money trying to buy something that was inevitably going to crash. So what you want to know is, how did I know it's going to crash? Okay, so it was quite simple, really. I'm just going to play a couple more days. Here we go. So this is the point where it's broke. and now it's broke brilliantly. So we can see the market is crashing nicely. So at the moment, I've not applied any TA for you to view this, but I will overlay it in a second so you can see how it was done. So in a minute, you're going to see a very, very strong green candle. This. Now, at this point, so many people were shouting, buy, buy, buy. And it did, you got to think about it. It did move up 4.6 to, it's about 5.5 area, maybe slightly higher. This was also coincided with a contract ending. I can't remember what the FA was at the time to support this move, but it done two things. One, it was kind of the perfect retest to confirm that the market was going to go down harshly. And it also gave a lot of big buyers in the market an escape route. So they obviously took this opportunity, because what's happened here, the market is turning from this bullish move that was happening for some time. You look at it. We had this was the Arctic blast, and then from this point on, we are literally in an uptrend. And the market here is now. These moves were amazing, by the way. Look how ferocious they go up and come down. But the market, it swung nicely. So the question is, how did I plot everything? So I'm gonna just go over this and just give you a brief understanding of what I did. If you're members of the course now, things like this should click nicely and you should understand. You've got to remember this is a specific trade. You can't apply this to every single trade. There's techniques for different trades. So just use this for like educational purposes, but remember there is a lot more to it, okay? Here we're going to go. So remember, at this junction here, I've kind of advised that I am looking for 3.7. I'm just going to mark that in. So I'm looking for 3.7. And the market is now swung up. So everyone is declaring buy, buy, buy. But I've stuck to my guns, because once you've mapped in your TA, and the problem is if you're looking at lower time frames, so if we go down to an hour, and you're looking at some of these moves, that's going to be quite a spooky move, and you're going to be thinking that the market is going to keep pushing up. But generally speaking, the market is still very much forcing its way down. So without applying any indicators, how did I know it was here? I'll be honest, you can apply indicators to predict these movements, but you can also use sort of measured moves as well. So let's explain. If I was to take this and take the top of that to the top of that, and if I was to take this from the bottom of there and move it up to here, you've now got this trading zone. Okay, so if I was to take out this, because we're about here where, when I'm telling everyone, we're around this zone. And I'm basically saying that once we break here, you want to be looking for shorts. Really, ideally, you don't want to be trying to buy and sell the market. When markets break, they break ferociously. They collapse. When they're falling within a structure, it's quite neat and tidy. Once this formation is set up, it's sticking to this path. If this was to respect this, then you'd expect it to come to about here and just until the equilibrium breaks. I was looking for it to break south because we also had this where the market is already starting to swing in that direction. We had other confluences. If you checked, divergence and MACD and other things like that, it supported this move for it to come down. But how did I come to this zone? That's probably the big question. Well, there are two ways that you can do this. The first thing you can do is you can map this. So if we take it from there to here, we can see that it's around 2,700 pips. Okay. Then we expect the fall to be around 2,700 pips, which has taken us just below this zone. But more to the point, if we were to grab our Fibonacci tool and we take it to the top from the bottom on a higher time frame, we are perfectly within our entry zone. If we combine that with the fact that we do have a good support level around this zone, then really everything is pointing to this direction. The measured move points to around there. The support zone tells me it's there. The Fibonacci tool also backs this up. So for me, it was quite simple. It is literally just patience, which we keep drumming into the Zenez course. That you need patience. You need to wait for certain triggers. If you want your money to grow, then we teach you all this in the course. And like I say, this is just a little snippet. So let me just show you how it played out. Look at this. The zone I spoke about. Look at this bounce. Now, if I'm honest, I wasn't expecting the ferocious candle up, but look at it. Comes up, tests this structure, and then smash. Boom, hits the target. So if you were entering at this point, or this point, once it's broke, you're pretty safe at holding. And that took, so that was like November the 9th. So it collapsed. So about a month. You had to hold it for about a month, but you got like 1,800 pips, which is a lot of money, depending on how much you've leveraged with. Well, really, it doesn't matter how much you've leveraged with. It's still a lot of money because it's still going to increase your account massively. So it was very basic, really. It was just a case of following the structure. Now, don't get me wrong, you have to dive into the lower time frames to really help predict these entries. I did use other confluences to help my trade. But generally, it was just a very basic setup. And like I say, the Zenez course breaks all this down and simplifies all this, and just literally shows you exactly how to predict where the market's going to maximize your profit. And all I can say is just think about how many trades you've lost, how much money you've lost against how much the course is. So outweigh the difference. Is it worth paying something that's going to reduce those losses and turn them into wins and potentially send you on a winning streak? The choice is yours. But for me, this was a very simple, a very easy spot. And I think it's because a lot of people just don't know what they're looking for. And that's the general truth. Unless you're actually taught how to, it's like driving a car. If you get in the car and start driving around London and you've never driven before, there is a good chance you are going to crash. And if you don't have a bad crash, you are very lucky. That is the same as trading. You get behind an account and start using your money. If you haven't got the knowledge, the crash can be quite severe. So all I'm going to say is use risk management. This is, like I say, a very small part of trading. I hope you found it informative. And now you understand how I predicted what looked like an amazing move, but was just very simple trading concepts to get there.